Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, January 4th, 2024. Just heard some interesting stats about the NASDAQ that the last time it had opened the year with two consecutive 1% down days was in 2005, and then the time before that was going back into the 1980s. And really what it's what it's gathering is that there was just way too much euphoria over the rate cuts and stuff like that, where people were pricing in like the Fed was doing QE. And we're starting to see, a little bit of a tester for the bulls that thought that this market was going to be going straight up into the 5,500 level. And it may end up there. I'm not saying it's not, but right now the trajectory of the move that we saw from October, it's not sustainable. And even if we're supposed to see some kind of top in, that's not scheduled until the springtime, it doesn't mean we can't see a 5% pullback before then, before the rally continues. So this was the line that I've been saying, I've been watching, the 46.97. We did break through that, and that's after the bulls tried to, it was up like almost 15 points today. And then when we came down, we saw some selling. So I think a lot of people are going to be waiting for the non-farm payroll numbers to come out tomorrow. And as I said, they're really just nothing, because they're revised every year. So people take the headline numbers and they discount the revisions, which half the time are exactly where expectations were, if not below. So it's a lot of this is smoke and mirrors, and it's one of the things that's just I kind of scratch my head on. But in any case, the ADP numbers came out pretty good, and in the morning notes, I said that maybe that means that the NFP numbers are going to come in bad, because for really the last 3 months, ADP numbers have been lagging, and then all of a sudden the non-farm payroll numbers come out and they blow it out, and then they revise them the next day. So it's almost like three card Monte right now. It's hard to believe anything that comes out from these reports. But in any case, we broke this support. If the Bears, let's say they don't like the non-farm payroll, and they open down, I mean, really the next support's coming all the way down into the 46.56. But as I said, we have a plethora of open gaps below, and the real support doesn't even come in. And well, we have this right here, this support that's at that 4600 level, but the real support comes in at 4540. And then, like I said, we have these open gaps. So the head and shoulders pattern still could be in place, especially if we get some kind of bounce tomorrow. They say they like the non-farm payrolls, and it pops back up. This would simply be the right shoulder. Now if it heads down, and let's say we find support at 4660, and then we bounce back up, it's going to be kind of hard. I mean, we can be able to call it a head and shoulders. It would just be a declining neckline. But in any case, that pattern's there, and I've been showing you a lot of the say the longer term pattern charts that I've been showing with the put call ratio and stocks above the 50-day moving average, and those are intermediate term views. They're not short term, and it doesn't mean that the market has to turn right away. But in any case, they're there and they can't be ignored. And we have on every aspect of the way that you measure where we are as far as price, we're extremely overdone, even with the first 2 days of having a little bit of a sell off. So really the bulls are going to have to get above this 47.33 to get themselves out of harm's way. If the bears want to see momentum pick up on the downside, they got to get it through this 4660. If they do, most likely we're coming down into the 4600, or possibly down to this 4530. But as I said, we have these open gaps down here that I wouldn't be surprised to see them get closed. So no sense in trying to really overthink things. I think no matter what's out there right now, it's going to have to do with how the market reacts to the non-farm payrolls. So let's just see what goes on. We're pretty oversold here. We have some bullish divergences, but nothing really crazy like this. So, on the 15-minute chart, though, you can see we do have bullish divergences. So if we got a bounce, it wouldn't surprise me. And like I said, until the bulls can get it above the 47.40 level, and then really more importantly, well, actually the 47.40, that's it. If they until they get above it, the bears are in short-term control, not intermediate term, because obviously we've saw this big move, but short term, that's what the Bulls need to get above to get themselves out of harm's way. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.